Hey everyone, it's John. It's October 6th, Friday. I'm recording this at about 11:12 a.m. Eastern Standard Time. I apologize for the microphone. I'm on vacation in Virginia Beach and I don't have my microphone, so I'm using the computer. So, with that said, I'm an amateur individual growth stock investor not affiliated with MarketSmith or IBD. Here's our agenda today. We'll talk about the Qs, monitor for change. Then I'm going to discuss my watch list and we'll wrap up. So let's get into the Qs and some of the internals of the market. So this is the chart of the Qs. In the upper panel, this is the percentage of stocks above their 5-day moving average. And you can see this is at an extremely low level. There's a very small amount of stocks that are above the 5-day. Way back here, way back in March, we haven't seen these levels. On the lower panel is the accumulation distribution rating. Like to see it above 1, which is the black line. We're still below it on the Qs. So looking at the chart itself, you can see that we tried to rally for a couple days, pretty weak. You can see the red spikes. There's still lots of distribution. Reached the 20-day moving average, which was resistance. We're kind of dancing with support levels from the prior swing low. The bottom line is fairly simple. We got lower lows and lower highs. It's really simple of a downtrend. We're at the support level. If this support level were to break open, this shaded area in orange, you can see there really is no support all the way until you get down to this 320 level in the Qs, which is approximately another 11% drop. So we'll have to see how it plays out. This is the new highs and new lows on the NASDAQ. We've had some of the lowest readings of the year. You can see this acceleration in new lows and the complete dry up in new highs as we approach the lowest, almost the lowest level of new highs going back to the March banking crisis. So this is all really negative. We don't have a good environment right now. Wanted to call up the XLU, which is the ETF for utilities, and they saw a dramatic sell-off earlier in the week. It's really been bad the past 2 weeks. It's because, even the dividend yields on utilities, which is usually somewhere in the 4% range, can't even compare with the yields on the bonds. The bonds are above 5%, and so people are shunning even defensive groups like utilities because of that. So real sharp plunge there. Now I also show here copper futures. Copper is a widely used material in the world economic activity in so many materials. And even it's just showing us that it's down at a support level here. Usually copper leads some economic activity globally. So breaking down here is showing us that maybe there's some bad news on the world economy front. Next chart, this is the S&P 500, the percentage of stocks above their 50-day moving average. Again, really disturbing to see this plunge that we've seen since August. We are down, we touched below 10% of S&P stocks were above the 50-day moving average. We are way down at lows that we have not seen since the October market bottom back here in October of 2022. So we're reaching some pretty extreme levels at the moment. This is the New York Stock Exchange. This is the advanced decline line, which a couple of weeks ago we shared that even though things weren't great, we were still holding an uptrend line from the October lows. Here's the regional banking crisis where we had a plunge, but we held some support. Now, in the last month, this is really not a good look. It's a hot knife through butter look where we're plunging through the 50-day and the 200-day moving averages. Really sharp decline. You can say maybe there's some support down here in the regional banking crisis lows, but with these extremes, is it possible that we might get a rally? It's possible. We'll have to see how things go day by day. Now, on the positive side, September has been a horrible sell-off the last 2 weeks, and we're into October now. This is a chart from Sentiment Trader about the S&P's seasonality of all years. So if you took all the years and made a chart of that, you can see this blue line. Now, you can see here it's also reflecting that the fall, September, October is a bad period, and they've marked where they believe we are in the cycle. We're here, which shows that we would still have potentially more downside to maybe have a bottom sometime in October. And it's showing that if you're optimistic, maybe the end of the year we get a turn back higher. So larger term sentiment, or excuse me, a seasonality chart on the S&P. So we're always monitoring for change in the market, change to the upside, change to the downside, so we can get positioned correctly. So what's happening? Well, since we talked last week and really the past 2 weeks, there's nothing really that has changed much. We know that we're looking for a rally day attempt and a follow-through day to help turn around the price action in the market. But all of these are basically consistent with last week's. We're starting to build our watch list. There are some names that are starting to fill out better than others. But we have net new lows, which is really negative. We have no consecutive days above the 20. We have resistance at the 20. The breadth has not been good. Volume spikes are still red on balance. And so it's just not a good environment. Nothing really has changed on the front to tell us that maybe we should be prepared for a turn. But it doesn't mean we don't want to stay engaged with the market. And we want to stay engaged. And I want to move next to my watch list to share names, because even though the conditions don't look great, we should always be prepared in case things turn. Now, before I dive into that, back at the end of December of 2022, I made picks on December 26th. And I wanted to do an update because Q3 ended last Friday. So here's the current picks that I made back on December 26th. Now, don't forget, I'm locked into these picks for an entire 12 months. I can't change them. Here's where we were at Q1, the end of Q2, and here we are at the end of Q3. You can see that I've had a few good ones, CellH and Nutanix and Supermicro were good, but there's been some real bad ones too. Enphase was a disaster so far. Pod had an incredibly terrible quarter, going from -1% after the second quarter. Now it's down 45%. And Pi, which is impinged, has been pretty poor the last 6 months. Overall, you can say I'm still up 16.7%. Again, picking in a year in advance and being held to those picks is very difficult, but it is what it is. It's good to kind of see how things are going, and we'll monitor it as we enter the end of the year. So here's my current watch list. These are names that I think are showing relative strength, they're resisting the downtrend, or building bases that might be showing accumulation. I think in cybersecurity, there's a number of names that are still holding up well: Crowd and Zscaler and Palo Alto. In tech, there's a number of symbols I think that are still holding up well, from NVIDIA and VRT, SMCI, ServiceNow, Dell, Nutanix, and even ARM, which is a new issue, a semiconductor stock, but it's relatively young on the market and be one to watch. Now, on the younger side, some of the more younger names in the market: Duolingo, MMYT, Rely, Braze, Mobileye, and CRS. And I'm also looking now at the 2021-2023 IPOs, and I'll speak a moment why I might be looking at those in a bit. So let's look at a couple of these charts. So I've called up CrowdStrike here. I like the chart in the sense the market has really been looking really bad. The action's been bad in the market, but you can see CrowdStrike formed a cup, it failed to break out. Formed this cup with a high handle, it tried to go again, broken down. But now it's gotten some support at some of the moving averages. And you'll notice that we're above the black line, which is 1.0 on the up-down volume. The blue line is 2.0. So it's still showing accumulation for a month that's been terrible. So I think this is showing a lot of relative strength. It's one I'm watching. Supermicro is trying to rebuild and repair itself after that nasty gap down, forming a little double bottom here. We're starting to see some blue volume come in, and we're just starting to see the up-down volume come in above 1.0. Still has more work to do, but I think it's a positive sign that it's building a base showing some positive signs. A couple more to look at. Here's Remitly Global. Younger company, again, showing some relative strength. to the market. I mentioned this one about a week ago, and you'll notice that the up-down volume on the stock has been right around 2.0 throughout, going almost all the way back to mid-August. So that's very constructive. The price action's been still pretty good, and it's holding in there. Next one is Vertiv, VRT. I will disclose I have a position in Vertiv that I've been holding. Again, the stock has come back with the market, but it's still holding in a very controlled pullback. It has not been too erratic, which is a positive. And you can see the up-down volume has gone from about 1.6 all the way back up to 2. So it appears the stock is still being accumulated during this market correction. So it's definitely high on my watch list. Now I pulled up the Renaissance IPO ETF in blue, and you can see IPOs have been, absolutely crushed since 2021, late in the year 2022. But you'll notice that in 2023, it started to trend back up. We broke the downtrend, and I've marked on the chart a number of IPOs in this period. A bunch of IPOs came out late in 21 and early 22, which is probably a horrible time to come out. But some of these names we should be watching to see if they build bases. Look, I mentioned Rely, Raise has been acting strong, Duolingo's on my watch list. So it's, even though we think the market is really, really looking bad, we want to stay engaged and looking for new merchandise. Now, this year, there's been a number of IPOs. Recently, we've had a batch come out, even I mentioned ARM and Instacart, and, Shark Ninja. We should keep our eye on some of these names because any new bull market leg is going to have some new merchandise. And though it may be counterintuitive, these might be shaping up to be future leaders when we get the bull market to restart. So something to keep on your watch list and stay engaged. So wrapping up, it has not been a good last 2 weeks. Basically, we have the Fed, which is hawkish. They're selling bonds and draining liquidity from the system. It's quantitative tightening. That's not helping the bond market. Our government here in the US is selling bonds to pay for all these deficits. So they are selling bonds as well to a market that is declining. And inflation still remains elevated. While the labor market, we had the non-farm payrolls today showing that it's still fairly strong. And all that is going to do is feed the inflation remaining sticky, putting the Fed in a really tough spot if they need to just hold rates or maybe they need to raise rates again. We have the UAW strike, a lot of bad news out there. And the government shutdown patch has really just pushed off the problem until just before Thanksgiving. So there's a lot of bad things going out there but we want to be particularly watching the price action of the market. Could go either way. We could get a bounce attempt here. Maybe it's weak, maybe it rolls over and we hit more new lows and oversold becomes more oversold. Or maybe we get a follow-through day. We get a rally, it generates a follow-through day. We see some stocks and bases that might break out. So we want to be prepared for that. But as a growth investor, a position trader such as myself, we want to stay really patient. We want to keep our exposure levels very low right now, very defensive. We've covered in this video, we know what we're looking for, we just haven't seen it yet. So even though we haven't seen it, we still want to stay engaged. We still want to keep our watch list very sharp, so we're prepared for the turn. So I'm going to keep the quote of the week the same one as last week. The easiest way to be wrong in the markets is to make predictions. Again, try to just interpret what's happening. We have some hard action in the market. Maybe we get a rally attempt. We'll have to just wait and see. For those of you who are not aware, the Blue Sky event registration is open. It's a virtual event. Just check the pinned tweet on my Twitter page, my X page, and you'll get the information, the link to register. We're having this early registration, which continues to October 15th. You'll get the 2024 market diary, which has a lot of interesting quotes and market data. And a lot of people have been asking me, and I'll mention it here again, the event will be recorded and you will be able to watch the videos unlimited for 2 months post-event. There won't be any downloads though. So take advantage of that. If you can't, if you're busy on the day of the event, you must register to get access to these recordings. So Please try to do that if your schedule doesn't allow you to attend live. So that's the general market update for October 6th, Friday. We'll see you all next week.